Are Micron stock and LBrands stocks complete value traps? That is what we're going to talk about here today, guys. A lot of you out there own one of these two stocks, either LBrands or Micron, or at least thinking about owning it. So I really want to get into this. These are two stocks that are held by a lot of retail investors out there. Retail investors, meaning like average Joe investors, I guess you could say, especially Micron. One of the ways I love to tell, how many people out there actually hold a stock in terms of the retail investors is I love to go on Seeking Alpha, and most articles written on Seeking Alpha struggle to get like 5 or 10 comments, but stocks like Micron, AMD, Tesla, those type of stocks on an article can get hundreds of comments. A lot of people invest in these type of companies out there. So we got to talk about what is a value trap, okay? I want to explain that in this video. We got to talk about what a value investor actually looks for in a stock, and then we got to talk about is Micron and is LBrands, are these stocks actual value traps? That's what we got to go ahead and discuss here today, guys. So first off, if you don't understand, what are the 6 things that a value investor is looking for, okay? There are 6 core things that most value investors are looking for. They're looking for a company that is easy to understand. They don't want a complicated business model, all right? They want a company that they probably already are familiar with this company, very easy to understand business. Think about, Apple, for instance. Is that a hard business? It doesn't matter if you know anything about stocks, you probably know how Apple makes money at the end of the day. It's not a complicated business. Love very easy to understand businesses. Value investors love businesses that have been around for a long time. They don't like some new kid on the block that just, was invented 5 years ago or 10 years ago. Most value investors are looking for companies that have been around for decades and decades, all right? Not some new company. This is one of the biggest things value investors look for, and it's a low PE ratio, price to earnings ratio, meaning how much net income is coming in through the door each year versus what that share price is right now. And they love a PE ratio that is lower than what the market's trading at. So let's say the market in general is trading at a 15 forward PE on average, the S&P 500. They generally want to find stocks that are, 12, 10, maybe even lower than that. So they feel like they're getting a better value than some stocks that are priced averagely, all right? They love stocks that pay dividends. This is another big thing a lot of value investors look for. A lot of value investors, they won't even invest in a stock unless it pays a dividend, all right? That's another big thing. Also, they love companies that are making profits every single quarter. So there are some companies that only make profits sometimes a year, okay? So, maybe one quarter they make a big profit, next quarter they lose money. One quarter they make money, next quarter they lose money. They don't like businesses like that. They like businesses that are bringing in money every single quarter in that net income line. And last, they love needs-based businesses, meaning that it's not just a want-based business where people have to, are just looking at it as we want to go buy this. So it's more like a need-based business. They love businesses. So Micron and LBrands, do they meet this criteria? Honestly, the majority of these criteria these two companies meet. Easy to understand. LBrands owns Victoria's Secret, which sells bras and panties, and they own Bath and Body Works, which sells soaps and lotions. These are not hard businesses to understand. Whether you know anything about the company or not, it's not a hard business model. Micron sells memory, okay? DRAM and NAND, very, very simple businesses to understand, not complicated at all. Been around for a long time. Both those companies have been around for several decades. Low PE ratio. Micron, I believe right now has a forward PE ratio under 5. I think it's somewhere in the 4s right now, okay? In the 4s. Think about that for a second. Micron has a P ratio in the 4s right now. LBrands has a forward PE right now, I think it's somewhere around 10. All right, so around a 10 for LBrands, well under what the market's trading at. And Micron's ridiculous at somewhere in the 4 range, all right? That's just like mind-blowing, ridiculously low forward PE. So both these companies definitely meet this criteria without a doubt. Dividends. Micron does not meet this. They do not pay a dividend as of right now, although they could easily pay a dividend if they want to. LBrands pays a ridiculous dividend. It's over a 7% yield. It's absolutely insane, guys. So LBrands definitely meets that. Micron does not meet that, and that's probably the only category Micron doesn't meet. Profits every single quarter. Yes, Micron is just bringing in money hand over fist, 3, 4, sometimes even more than $4 billion a quarter every single quarter. LBrands, they're also profitable. They make the majority of their money money in the Christmas quarter. However, they're generally pretty much profitable every single quarter. And then needs-based business, when we think about Micron, memory. It's a needs-based business. Like if for all computing products out there, they need memory, all right? So Micron is one of a few players in the space. It's a needs-based business. And then you think about LBrands, soaps and lotions, underwear and bras, like needs-based business. Yes, they compete on the higher end. You can certainly probably get underwear and bras and all that and soap cheaper at Walmart or something like that. They compete on the higher end of those spaces, but at the end of the day, they still sell needs-based products, and that's what value investors love. So Micron and LBrands, they pretty much meet the criteria of what a value investor looks for almost to the T, all right? But now we got to talk about what is a value trap and are these stocks absolutely value traps? All right, guys, now let's talk about what is a true value trap. There are two things to identify if you're getting in a stock that is a value trap. The first one that makes a value trap stock is, are the best days in the past for that company. The best days for that company were they last year, the previous year, years in the past, all right? Meaning things are getting worse. And the second part is that company in a slow death spiral of things getting worse? This doesn't mean the business is going out of business overnight or anything like that. A value trap basically means that you're getting in a stock where things are just getting a little worse, are just going to continue to get a little worse each year, all right? Think about, you could have made an argument many times, I'm sure, that Sears was a type of stock that you should have been in because it was a good value. It traded at a low PE or something like that back in the day when they were still a profitable business. But if you really looked at the business, they were slowly getting eaten by a lot of places, and their business model was slowly getting worse and worse and worse until we get to today, where Sears is pretty much almost a bankrupt company. It's a shell of what it once was. They're pretty much done now. You would look at Sears and you're like, they're done, okay? But it took a decade plus, a decade and a half for them to peak, and then all of a sudden, things get worse and worse. I think Sears peaked in profitability, a long while back, and things just slowly started to get worse and worse each year. Each year, things would get worse and worse. The profits would be less, the revenue would be less, and the business just continued to weaken, all right? And you can look at that with a ton of businesses. Now, it doesn't also, a value trap doesn't mean necessarily that business is going out of business even a decade from now or something like that. It just means that the business is going to continue to weaken, all right? So we got to look at this and we got to say, does this fit the criteria of Micron? Does this fit the criteria of LBrands at all right? And by the way, these things are bad not just because they weaken the business model, but because they turn off new investors. And if you can't get new investors in a stock, that stock price is going to continue to fall because some of the old investors will always sell off because either they're forced to sell off or they need that money for something or they found somewhere better to put the money. So you always, as a stock out there, as an individual company, you always need to be attracting more and more people to your stock or your stock price will continue to go down and down and down. You need more buyers and you need sellers if you're going to make the stock go up over time, all right? So let's talk about Micron first and then we'll talk about LBrands, all right? In Micron's situation, we have a company that most people, even a lot of bulls, believe that 2018 is going to kind of be the peak for this company. Even a lot of bulls say, starting next year, 2019, revenue is going to start going down. Profits are going to start going down. 2018 is going to kind of be our banner year, our best year in terms of profitability, in terms of everything across the board, all right? Fiscal 2018. So going into fiscal 2019, they do meet the criteria. Best days are probably in the past, okay? Meaning this year we're in, this fiscal year we're in for Micron, it's probably going to be the best year. Like I said, even a lot of bulls feel like, the profitability will start to erode. Now on the flip side, a lot of people make the argument that, okay, this is a company that let's say is at a forward P of 4. Let's say profitability, net income. Let's say net income fell by 50%. That would still put the company at a forward P of 8 or 9, which is still unbelievably low and still well below what the market is, all right? So best days in the past, it's very much a possibility for Micron. Possibility, key word. Slow death spiral, all right? There are a couple ways you can look at this. A lot of people are bullish on a new product called 3D Point that Micron has. They think that can help the company take it to new levels over the coming decade, all right? But at the same time, a lot of other people look at this as a space, the main products, DRAM and NAND, that Micron makes a majority of their money from, have a lot of Chinese competitors coming in over the next, few years, let's just say, okay? So a lot of people look at this and they say, these unbelievable prices that Micron's Micron's able to get right now for memory, which, you know, DRAM and NAND are pretty much commodity products. All right, there are a few big players, SK Hynix, Samsung, Micron. In NAND, there are a few more competitors, but the Chinese competitors are coming in a major way over the next few years. So what some people look at is they say, these unbelievable prices that Micron's getting right now that's producing this amazing profitability, this is not going to be the same way as in 2019 or 2020 or 2021. And what will end up happening, some people believe, is prices will go down, and Micron will lose market share, okay? Micron will lose market share, MS. So you got a situation where people believe that they'll lose market share to a lot of the Chinese competitors over the coming years, and where people are saying, well, guess what? These prices you guys are able to get on these products right now, that is going to go down. Now, this remains to be seen. I don't know. I don't have a strong opinion, in my opinion, on Micron, whether, you know, this is true or not. Best days in the past, it very much could be. And are they in a slow death spiral? It could be. I don't know. You know, that's why I can never buy. I'm very tempted to buy Micron stock all the time. I look at it and I'm like, my goodness, look at the PE this company's at. Look at the PE that this company's at. It's a needs-based business. But then when I think about the Chinese competitors coming in, then when I think about, you know, the pricing, and we just heard Apple's CFO recently say that memory is going to go from a position from Apple being a headwind to now a tailwind because memory prices are dropping significantly, according to the CFO of Apple. This is a very important person, okay? He's one of the most important people in the world. The CFO of Apple is one of the most important people in the world. He's saying that memory prices are falling significantly for Apple now, which is a great thing for Apple because they're the second biggest memory buyer in the entire world. So that's a very good news for them, all right? So when I look at Micron, it could be, it might not, but that's the problem with a stock like Micron. That may be why it makes it a value trap, is when investors look at the stock and they say, wow, it's a really low PE, needs-based business, but man, I don't want to buy it because this company might be in a death spiral. Might, and that keeps money on the sideline. So it keeps hedge fund money on the sideline, keeps mutual fund money on the sideline, and keeps regular Joe investors on the sideline because they look at this and like, man, there's some promising things there, but at the same time, this might just be a value trap. Until you can get people's mind over that, and I've looked at this company a million times, I have not been able to get over this. A very close friend of mine, it's by far and away his biggest position. Unfortunately, he has like 80-90% of his portfolio. Maybe he'll do great over time, I hope he does, but he's got 80-90% of his portfolio in Micron stock. And I can't even get in this one, okay? I just can't do it for myself. So, big question there, LBrands. Are the best days in the past? Probably, all right? 2015, 2016 were probably the peak for the company in terms of profitability. They were earning, you know, $4 a share or whatever. Can they earn that in the future? I'm not convinced of it, to be honest, because you got a company that looks like it's in a slow death spiral. The only thing holding this company together right now is honestly BB Dub, Bath and Body Works. Other than that, if you look at Victoria's Secret, the numbers last year were awful numbers last year, just a complete disaster of numbers last year. And you look at this year, and the numbers are still continuing to weaken for the most part in the terms of total sales and comp store sales, and they've done a lot to try to push business, a lot of things that have hurt profitability in a major way. So when I look at their business, it may be in a slow death spiral, and when you look at how many retail locations they have, and when you think about this as really a mall-based business, and you think about mall traffic continues to trend down and will likely continue to trend down over the coming years, they pretty much have to get in the online space. They're doing that. They're trying to succeed there. But the question is, can they ever get to a point where they're as successful as they have been in the past? That's a big question. So when I look at LBrands, I say I have a lot of questions there. And then when you pay out all your money in dividends, all your profits coming in the door, you pay them all out in dividends, you have this unbelievable amount of debt you have. It's like, how are you even going to invest in the future to really take these brands and make them big time over the coming decades? There's very short-term focus there. So the slow death spiral, they could very well be in it. That's why I can't be in that stock. So anyways, I just want to share this with you guys. Let me know in the comment section if you believe MU or LB are you know, the type of companies that are value traps. It's a big debate out there. I think there's definitely an argument to be made that those are value traps. You know, if you ask me what company would I put money in if I had to, if I was forced to put money in one of the two companies, I'd probably put it on Micron. I would say that's probably a less of a possibility of being a value trap. But you know, when I look at both these companies, there's big questions there, guys. A lot of questions around those two, but they look really cheap. They look really cheap when you just look at it at the PE ratio. So let me know what you guys think down there in that comment section. Make sure you follow me on Instagram if you love to keep up with stock market news. I post a ton of stock market news in the Instagram stories. Thank you for watching. Have a great day.